0.07%.
For some thoughts on what's moving markets, we speak to Michelle Schneider, Chief Strategist with Market Gauge. Mish, good morning. Thanks so much for joining us today. So we did see weekly jobless claims come out overnight. I believe that it was the lowest figure that we've seen in a while. What does this say about the state of the U.S. labor market?
Well, the state of the labor market, is certainly if you're looking at the jobless claims, shows that there are plenty of jobs out there, but we also have to remember that the number of jobs available also went down. So the question is really not going to be so much what happens to the labor market now, but more importantly, I think what happens to the labor market in 2025 under a Trump administration if he does indeed start slashing government jobs, because that could put millions of people out into the labor force looking for jobs. So I think all of that will be in the equation as the Fed is taking a look at that very important area.
I guess we should look at the last rate cut before we enter the Trump administration. So that probability of that 25 basis points cut in December, how consequential is that?
Well, it's so interesting because we have such a bifurcated market here in the U.S. We have pockets like the labor that is showing certainly not floundering, not necessarily going nuts either. And then the manufacturing numbers being very, very mixed. The Philly Fed number was actually lower today. So essentially what the Fed has to decide. Oh, and then, of course, we've had slight elevation in inflation compared to other months. Year over year, we're still stubbornly over 3.3% in the core. So I think the Fed could, if they were logical, probably take a pass on December rate cut, but there's still a very good percentage chance that they will cut. And that would be because they're not necessarily pleased with how some of those inside sectors are doing, particularly in small cap market and even in the retail market, because the consumer is still obviously having some issues with these high interest rates.
I want to circle back to jobs, but looking at things from the immigration perspective, because as we know, Donald Trump is going to be, he has talked about that quite significantly in terms of his rule. I think he's planned to deport people, and I think I've seen studies said that it might affect up to 7 to 8% of the total U.S. job force. So what kind of strain would that actually put on the U.S. economy if that worst case scenario were to happen?
Well, first of all, I think it's a very difficult task because how are you going to actually discern who should leave and who should stay? I mean, that's number one. And then, of course, how they're going to find the people to leave is troublesome to many because it sounds like there could be military involved. And, of course, now that brings up a lot of history that people will not find particularly pleasant and will get very nervous. And I know this because I live in a state in the United States where there are a lot of immigrants because it's New Mexico, so people have come up from Mexico, Central America, and South America. Just give it a little context. But in terms of the actual implication, we have a tremendous number of people in this country who are doing jobs that Americans do not want to do. You know, in the landscaping business, in the fruit picking business, in the housekeeping business, whether it be in the hotel business or even in the domestic homes. And so you have to wonder who's going to fill those jobs and what will that be? Are we going to automation? Not yet. Certainly not yet. So it could actually wind up being more of an inflationary factor if you don't have the people to do the things that they have to do to keep the supply chain going. And that's really, I think, the biggest concern in terms of the economic impact right now.
Well, if we take a look at the stock market, one of Warren Buffett, the Oracle of Omaha's favorite valuations, U.S. stock market value to GDP ratio, is at an all-time high. Is there still value to find in U.S. equities?
Well, it depends on where you look, and it's an interesting indicator, and that's one of the reasons why we've seen a lot of the billionaires like Buffett spend liquidating tremendous number of stocks up at these areas because they're looking at the potential that we could be peaking. But that's one indication. If you're looking elsewhere and you're looking at these inside sectors, as we mentioned in the beginning, where the Fed also would be focusing on, like keeping the consumer going, like keeping manufacturing in the U.S. going, those, if we can actually get the consumer to continue to buy into spending money, particularly as we go seasonally, that leaves a lot of opportunity outside of what we've seen, which is the tech. And that, of course, looks a little overvalued. That's what we saw today. Whereas other stocks like Gap reported today, Ross Stores reported today, these are sort of middling stores where people are shopping to look for discounts. They're actually growing. So you have to be very careful where you put your money right now.
What's the outlook for small cap stocks then?
Well, right now I thought that they performed very well. They have sold off. They never made a new all-time high, but they backed off into major support. And so I think right now what we heard from, like I just said, these box stores that reported today was that people are out there. And I think if that happens and the Fed cuts, we could see the small caps actually start to outperform, which is what a lot of people anticipated. They've just been very slow in continuation. They get volatile. They get up there, they get sold. They get up there, they get sold. So we're looking for a breakout. I wouldn't touch it until we actually saw the breakout, though.
Can we talk about something that hit an all-time high, which is cryptocurrencies, but focusing on Bitcoin this morning, staring at the screen, 98,600 US dollars. What's your view on this?
Well, stepping back from the jet fuel that the Trump administration has put into the Bitcoin market recently with all the talk of actually opening up some kind of a Bitcoin reserve in the United States, that is very controversial because it sends a message about the dollar, which has also been really strong. But the halving happened this year, and generally 6 months after the halving, we do see a rally in Bitcoin. Like I said, it may have been a little bit more exciting because of the very pro-crypto friendly administration coming in. But you have to forget about all of that, really. I think basically what you have to say is that the options market, the ETFs that are allowed, the number of platforms that are now giving people an opportunity to trade Bitcoin, on top of that, brought us to close to 100,000. The question is, can we get through there? And if we do, I think you have to look at it every 10,000 and trade it like you would any instrument. Make sure you take some profit. Make sure you have some sort of a mental trailing stop. And, that's basically about, Bitcoin still looks great to me. It just went up way fast. But if MicroStrategy is any kind of indication, which had a big sell-off at the end of the day, we may see a little bit dip from here.
What about gold, Mish? What do you think about the prospect for gold, given that we did see gold being one of the losers after the U.S. election? U.S. economic growth and U.S. dollar are expected to stay resilient. Is there still a place for that precious metal in investors' portfolio?
Well, yes, absolutely, because regardless of everything else that we just talked about, there's still a big risk out there with Japan, with, and that whole thing with the yen. The dollar right now is very strong, hasn't really affected gold too much, but also the geopolitical situation. I mean, this whole Russia-Ukraine thing is looking uglier and uglier as we're starting to read about, even the UK and Germany potentially now trying to get some military together, and North Korea sending troops to Russia. I mean, it's kind of a mess out there still. So you have to say at what point does some crack get wider? And that's why gold, I mean, it may have gone up to 2,800, but at 2,670, it doesn't exactly seem like it's bearish. To me, this latest dip was a buy opportunity, and I still think it can go to 3,000.
Mish, thank you so much for speaking with us. That was Mish Schneider, Chief Strategist with Market Gauge, giving us her take on some of the trends that she sees moving markets in the days and weeks ahead.